Hey guys, what's going on? Coming to you after the Saturday morning video. I'm 3 for 3 so far this year, so far as starting my routine. Feels good being back. Before I get this video, make sure you like, subscribe, comment below. It's much appreciated. Trying to get to 1,000 subs this year, so we'll see if that happens. So today I wanted to make a video just about like unemployment and a stock I bought yesterday. The company I bought yesterday was an Honest company, Hnst. This is a position I've been buying since, let me see if I can pull it up real quick. Actually, that's a good question what I've been buying it since. So I've been buying this stock since, let's see. I've been buying it since August, basically. So I've been buying the stock for now, what was that, 6 months basically? So I've been buying the stock for 6 months. I started buying, let me see actually, let me pull it up. I started buying at right around $10 a share, and that's where I started my position. And I've been slowly dwindling it down. My cost base now is $7.76. So I am 23.48% down on this position still. Not a big deal. As I said, I started buying it at like $10-ish. Yesterday I bought at $5.97, about 10% of my position. So I'm just slowly working it down. It's basically fully built out for where I want it to be. I was aggressively buying the stock in December and beginning of January. So I'm really happy, I'm really happy with my cost base at $7.96. Just for FYI, this stock, let's see, this stock 6 months ago was $14.45. And when it went public about 9 months ago, it opened up at like $23. And then it found like a nice level for a couple months at like $18 to $14. So just to put in perspective, like if you think this company had its best days and you think it will get back to 52-week highs one day, at my point with this cost base, that's a 2x basically easy. So I think this company has a massive future. It's going to take market share away from Huggies and Pampers and stuff like that. It's a needs-based product. The market cap is really small, and it's $580 million. So even if it gets to like a $2 to $4 billion market cap, that's really like a win, if it's at 500 mil right now, basically. So that's a 4 or 5x if it even gets to that. So it doesn't have to beat Pampers or Huggies or anything like that as far as like how big the company is. It's just risk reward. So really like this company. There's a lot of talks recently that we might be going into a recession. 2 negative quarters of GDP would be like a paper recession, basically. So definitely possible, depending how the Fed handles this inflation problem we're having right now. If they don't execute properly and go into stagflation or deflation, it's going to put us into a recession for sure. 2 negative months. So what if we have like a negative spring and a negative summer? Therefore, we in theory go into a paper hand recession in the fall, or just delay that summer fall. Then next winter we're in that. So it's a possibility. Right now, I think people are jumping the gun on that. Is it possible? Yes. Would I be surprised if we get a paper hand recession this year? No, but I really think we're going to figure it out and get through it. I don't know why I feel that way, so I'm kind of putting my money where my mouth is. I'm just staying in the market. I'm averaging costs down, not panicking. I'm just being a little more frugal with my funds just so I have more available in case something crazy happens. So yeah, that's where I bought at today at $5.95. I mean, I love this stock under my cost base. So really anything under $7.76, like I'm a happy buyer. It's just there's so many good deals out there right now. I'm just being very cautious with my money. So obviously mid and small cap companies, the next 2 to 3 weeks are all reporting Q4 earnings. So Corsair Gaming reports Tuesday. So that's a stock I'm very heavily built out in. I'm upside down probably like 20% of that stock, which is fine. I've been averaging costs down, but at that stock per se is one of my top 3 positions. I'm happy with my cost base, and I don't want to make it any larger because I don't like keeping more than like 20% weight of any stock in my portfolio. So kind of just content with where it's at, and I'm hoping for the best. I mean, if you look at Snapchat, it ran 60% after hours. So, and that was a $40 billion company. So what's a $2 billion company? Like, what can that do? I mean, it could easily move 60%, if a $40 billion one did. So I'm just kind of hoping it does that. If it doesn't, I mean, if it drops 10, 20%, maybe I'll average cost down more. So unemployment numbers came out, job data came out yesterday. We actually went up 0.1%, not really a huge deal. So now we're at 4% versus 3.9% of last month. I really don't think that's a big deal. You could argue maybe that, the virus and the new cases and people freaking out in January. You can even say like maybe seasonal workers, maybe they're sprinkled in that number. So, 4% unemployment really is kind of like, that's not bad. I think we want to be like in the threes always. That's like a healthy economy. The economy's spending, unemployment's low. The only problem is inflation's high and we have supply chain issues. So we have two goods, two bads. Hopefully inflation starts inflecting and coming down. And then we just have supply chain issues if unemployment's low and the jobs number. I mean, this blew the expectations out. We were expecting 147,000 new jobs. We came in at 467,000. So we over 2x their expectation as far as like jobs. So that's great. So that's super, super, super bullish for like, the economy. But now you have to remember like there's kind of a bad to that too, because if we're beating expectations on jobs and people working and spending money, obviously if you work, you're going to probably spend money. Well, that actually is bad for inflation, because that means, oh my gosh, like the economy is, unemployment's low, people are getting jobs. So that means, it's bad for inflation, because to slow down inflation, you have to stop spending and you have to stop raising pays and costs of goods. So it's good and bad. So what I think this is going to do, obviously Jerome Powell and the Fed speak March 16th. So they said they're going to raise rates 0.25%, which is a quarter of a point, obviously. I don't really think that's going to do anything to this economy. I mean, if the virus is going away like it is, unemployment's still low, jobs are beating expectations, raising it a quarter of a point isn't going to do anything. To be honest, I don't know why the market's freaking out so much. It's really not a big deal. So there are talks that possibly they raise 0.5%. Even that, I really don't think it's going to do anything. I really don't. Does it matter if it raises this or this? Is this going to deter people from spending? Let's be real. I don't think so. I think there's so much cash on the sideline. There's so much pent up demand to get out, travel, really everything. Just get back to normal life basically, because we've had 2.5 years of lockdowns, restrictions, just crazy stuff. So I don't really know if this is gonna really matter. The market thinks it's gonna matter, and the Fed thinks it's gonna help control inflation. I really think what's gonna help control inflation is we just need to hopefully land perfectly and just get right in the middle of inflation and deflation. I think if anything, we're gonna have deflation this year, just because people, when we had the vaccines last spring when they rolled out, people were so pent up and wanted to travel, spend, go out. So I think it's going to be really hard to beat those numbers with no stimulus. There's no, the Build Back Better plan didn't pass. There's no child tax credits. They were used all last year. You had an option to do that. So they're not going to see that in the returns this year. So I think there's a lot of headwinds as far as people going out and spending, which is good. That's going to drive down inflation. So I'm pretty bullish on, inflation coming down and being fine. The Fed is not going to bail us out, so they're not going to print any more money to help us. If we get, they don't want to rate hike too quick, because if you rate hike too quick and it goes down like this, and then the Fed's not willing to print money to bail us out, it's going to continue to go down. It's going to be deflation. That's bad. So, it depends what side of the court you're on, but I'd rather have deflation than stagflation personally. But yeah, the indices yesterday, Dow finished down 0.6%, S&P finished up 0.51%, NASDAQ finished 1.75% up. They had a really strong rally midday, and it kind of, people just sold off. I think people are half in, half out. Some people, I think, are getting a little bit of early FOMO, thinking we hit the bottom. I don't know if we did or didn't, but if we hit the bottom, would it surprise me? No. Some of these small mid-cap evaluations are just silly. All the tax loss harvesting done from all the profits taking last year in December. That money is parked somewhere right now. It's definitely not going into real estate, and it's definitely not going back into the market yet. So where is this money? I think people are just getting a little antsy. I think with the virus cases inflecting down as far as new cases on a 7-day moving average, we're looking really good. So I'm pretty optimistic, to be honest. I mean, like I said, we could go into a recession. Would it surprise me? No. Do I think it's going to happen? Probably not. But anyways, I'm prepared for both. So this is my plan. I'm just, let me see how far I am here. What the heck? Hold on. Oh, wow, I'm already at 10 minutes. This is my plan, basically. I'll make it real quick. I'm going to, anything that's non-essential or that is non-essential, I'm going to try to restrict my spending. I'm trying to recover as much cash as possible right now to, if there is something really bad that happens in the next month, 2 months, I have a ton of cash to deploy and take advantage of. If the market turns around and rallies, great. I'll get up to my 25-30% cash position again, and I will be, hopefully reaping the benefits of taking advantage of this crazy time in the market. So that's all I got. Again, I bought Hnst yesterday. If you guys like this video, make sure you like, subscribe, comment below. Till tomorrow, peace.